All right, video archive 64. This is an EVGO long. In this video, I'm going to break down three trades. One trade I took profit. I chunked my exit, took profit in a couple locations. You can see the three trades right here. So let's zoom out here. Basically, go to daily real quick. You can see we had divergence on these highs here. Started putting in a downtrend, which was defined by this diagonal. I was basically just watching the stock from about after this peak right here, the high. It turned out to be the high. You can see we got a swing failure here on the RSI. Divergence right there. And then it just gets sucked down here, stuck below this trend line, failing to put in higher highs. And I was just watching this patiently as we approached this macro trend line. As we approach that macro trend line and this gap, which if I go to the 2 hour actually looks like that, as you can see. I mean, let's actually zoom in here real quick, take a closer look at that gap, just see where it fills on the smaller time frames. Yeah, right about 282. We had a low at 278. As we approach this macro trend line, that blue diagonal, which I'm considering it to be the macro structure currently, or at least the definition of the macro trend until, I mean, since the all-time low back down here, until we break it, that is kind of the defining area for going long on this thing for the larger oscillation lows. You can see as we approached it, we started putting in this broadening structure. You have this, which is a way to, with a market structure, articulate or portray that increase in volatility, which we would potentially expect at the end of a trend. Something Rocky Outcrop has brought to my attention from watching his Wednesday streams. Check it out. So we start getting this increase in volatility at the bottom of a trend inside of the gap. You can see it's kind of where that range is. So I'm going to kind of just break down these little trades and I'll get them off my chart here. It's mainly just trading divergence. You can see we have divergence across from this wick and that there. Let's throw my moving averages on here real quick. This one, I basically just took a trade on that divergence and just want to check something real quick. Let's look at some fibs. Not quite. And I just took it back to this little gap here on the smaller time frames. Just took it back up to the bottom of that. It's a little 3.5% trade. Played out over a day, well, Monday to Tuesday. This one, you can see we came in to touch that blue diagonal and fill the gap completely. As we're putting in this, sequence of divergence, this rising tide of RSI. And you look at this blue line and that blue line, they are opposite slopes. That represents your divergence. I want to quickly look at a larger time frame here. You can see at this point, we had one 2, 3 touches. So I longed that there. That was I was hoping for a move to 322 on this instance, which I'll show you what that is in a second. But you can see we had this swing failure here on the 15 as we approached what, a 200 period moving average on the 15-minute or whatever, the 50 on the 1 hour. And at that point, I had this diagonal drawn on. I mean, I'd drawn it here, right? Just from here, but it was speculative. And as we approached that, I was wondering, that looks like a good place to fail. We just printed some this swing failure right here. And we filled this little mini gap right there, if it wasn't already filled from there. Either way. So I took my exit there. And that was a trade from roughly Wednesday, November 19th to Thursday, November 20th for 4.56%. All right, and now the main trade here. We'll flip it to the 4 hour. You can see we came in and wicked down to 278, which was a break of this diagonal, but we did not spend much time below there. It was a 15-minute candle, roughly. Put in another touch of divergence right here. So there's now 1, 2, 3, 4. R size floating up, took back its own moving average. I got in at 280. Now, it wasn't just this RSI signature. The main entry point and signal reasoning rationalization I used for entering the trade on this one was that price was touching this macro diagonal, and that has been my thesis since 430 was enter there, manage risk somewhere around 267, maybe 271, looking at these previous lows. You can see this is a clearly important level. We had a gap there in the past, support and resistance there, support here, support here, support here. So it was a good level, I thought, to manage risk below for an attempt to get a larger term trade rather than those low 15-minute time frame trades I was taking before. So it's a combination of that macro structure and where price was relative to the history of the chart, and then also the RSI signal here filled the gap, right? So I would expect some sort of reaction off of there. I was wondering if maybe we'd only get to the top of the gap or the 236. So my first couple targets were where I trimmed a little bit of my trade. I took a little bit off at 308, which I believe was on this candle right here. And then, as you can see, it broke through there, came up, tested the 236 and the downward sloping diagonal that defined the trend since this 517 high. That is where I trimmed a little bit more off at 322. I don't think I had this fib drawn on differently. I had it showing 322 as the 322 as the as that where that meets the downward sloping diagonal. It's one of those rare X marks the spot points. Where you have diagonals meeting horizontals and price getting sucked there. You kind of had the same thing down here, right? Where the gap fill on smaller time frames met the macro upward sloping diagonal. They crossed, and that's where price went to. So I took some off there. When I exited at 308, that was a 10% gain. When I exited at 322, that's a 15% gain. And then my next target, if it broke this diagonal, which you can see it then failed here at the 236 and there, came back to 308, which is crazy because 307 is where I would have cut my trade. Sometimes it works in your favor because then we're falling back in the gap, and then I'm looking for it to come down here and potentially, we have reasons to go lower. Always possible, always ready for that. But instead, we held the gap, consolidated here, and put in what kind of, if I zoom in here a bit, looks like it's a bit steep. But maybe you could draw that being a bull flag, maybe. I mean, that did happen to play out. I wouldn't have drawn it from this low. That seems a bit odd looking to me. I don't know the proper parameters for bull flag, but I mean, the elasticity doesn't lie. So whatever it was, that was what played out. And my target above this was 350, mainly because here we have the 382 at 352. 382 being from this entire move down. And once we broke that diagonal, I knew, all right, and held this, and was above this 236. We're now making a move back against this trend. And I'm looking for 382 because it is also where the 200 period moving averages. Also, our daily RSI was approaching the center line there. You did have divergence here, but man, it's a strong move. If we look on a small time frame, it'll probably be more pronounced. Not too much. Anyway, then I exited at 350 for a 25% gain. If price continues, which I just want to mention, we did just break this trend line today, and now we've retested it from below. But we do have an interesting RSI signature. It's about to cross the slow moving average here in the 1 hour. We did put in divergence between this low and this low. We're above our moving averages, which are about to cross. I mean, we got a strong looking move going here. My next target will be about, I'm looking for the golden pocket, 410. We got a Rocky Outcrop flash around there, 413, right in the middle of that golden pocket. I'm just kind of curious. This is just for my own curiosity. Does this elasticity take us there? Not quite. That takes us to 379. I will be watching this closely at this 0.5 at 379-ish, or also where you saw that 200 period moving average. Yeah, 389. So that I'll be watching that zone. I would expect there to be a little bit of congestion there. I'm gonna drop some horizontals here real quick and let's take a look. Yeah, you can see support, support, resistance, lots of congestion in there. Clear, there's a gap in there and some clear, right? It's clearly an important area. Another gap right here. Support, resistance, support, resistance. So it's clearly got a lot of liquidity in there. So I'll be watching that area also. And one last thing I want to mention here. I guess I'll just quickly point out, in confluence with that macro diagonal, we were reaching a 1.272 fib extension. So one of those two, actually, scratch that. Anyway, 282 was that roughly drawn on. I think that might have been just an extra layer of confluence for why I entered at about 280 was because you had that overlaying all the other reasons. I want to point out the weekly RSI here. Moving average and RSI are on the weekly here are very close to crossing, which has historically been a very strong and reliable signal for continuation to the top side. So if this comes down at all, I'll be hoping for, maybe a wick down to 302 to fill that fair value gap. I'm not sure if we'll get that. It's pretty strong, and 302 will be back. I guess it would also be a retest of this diagonal. So, in an ideal world, maybe we'll get something like or something like this. But anyway, I'm watching for that weekly cross, and when that cross happens, it's almost every single time played out to the top side. And the crosses always follow. Just to clarify, the crosses, the moving average crossing the RSI crossing its own moving average on the weekly here. I believe I have this set as an EMA also, the moving average. Yeah. Historically, following the cross the cross always follows a test of a macro structure. There's a channel price was in that I didn't quite draw it right, but that was a retest of this macro channel price was in. And then this whole time in the channel, every time after it touched the bottom, it led to that cross on the moving average. So it's been a pretty good lagging signal to gain, to get some significant portion uh of the move. You weren't exploiting this full range, but you were, waiting for confirmation and having a high probability setup. So that's what I'll be watching for in the coming weeks. That concludes this EVGO trade. Archive 64. See you next time.